Hi everyone. I'm going to take a moment now and work through problem 13-2A from your textbook on page 534. I'm going to work through problem 1 for you, and I hope this will be of some assistance. Okay, we are dealing with the Context Corporation, and the textbook on page 534 gives us some opening information. On January 1st of 2006, we need to purchase, the company purchased 2,000 shares of its own stock at $20 cash per share. So let's record that now. January 1, and I'm not going to spend a whole lot of time with formatting. It's purchasing its own stock, so that involves a Treasury stock transaction. And we'll assume it's credited for cash. They tell us it's cash. And we want to label this as purchase Treasury stock. And the calculation would be 2,000 shares times $20. So the dollar amount would be 2,000 times 20, $40,000. Again, I'm not going to spend a whole lot of time formatting. Let's just cover the bases a little bit here. That would be our first entry. On January 5th, so let's put in 1-5. I think I'm going to do it this way. The directors declare a $2 per share cash dividend payable on February 28th to the February 5th stockholders of record. Okay, so in this transaction, we declared $2 dividend on 18,000 shares. Declaration of a dividend we'll take as a debit to retained earnings. So it reduces retained earnings. And we'll record the liability, common dividend payable. Amount will be equal to the $2 a share times the 18,000 shares that were outstanding at that point. And I will just format from above here. In fact, probably I ought to format my whole columns as we go. Another thing I want to do is freeze this pane, so as I move down you won't have to scroll. If you can't see all of this in the window, though, you may have to scroll or adjust the size of the window that this popped up on. Okay, now it's February 28th. And on February 28th, we pay the dividend declared on January 5th. So here, all we're going to do, I'm going to copy rather than type it. Copy. And the amount of the dividend is that 36,000. You see, I'm just doing a lot of copying and pasting. I'm not a fan of doing a lot of typing when you don't have to. And that records the cash dividend payment on February 28th. Now it's July 6th. And we have sold 750 of Treasury stock at $24 cash per share. This is on July 6th. We know we're going to receive cash. And let's label what our transaction is. This would be a reissuance of Treasury stock. I hope you all see that. Okay, I'm going to slide this down. I think we've got a couple entries to deal with. We have Treasury stock that needs to come off the books at whatever value it was on the books for. And that should be the $20 we paid times the 750 shares. You follow me? We get a credit of 15,000. Now, we know that we received cash of 750 times $24 per share So we can force our third item. I want to delete this here. I'm just moving my comment down. And with treasury stock, whenever we are trading in our own stock, we don't record any income or a gain or loss from it. We have to adjust that within stockholders' equity. So we would credit contributed capital and treasury stock for the difference. Now we could simply force the number 18,000 less 15,000 to come up with 3,000, or we can actually calculate it, which is going to be the $4 difference between the $24 and the 20 times the number of shares we sold. What am I doing wrong here? 750. I got to learn how to type correctly. And now our debits equal our credits, and we've taken care of that last transaction. Now I'm going to slide down a little bit. So that we stay on the screen, and let's cover August 22nd. On August 22nd, we sold 1,250 shares of our treasury stock at $17 cash per share. Well, in this case, I know I'm going to have cash again, and we know that it is going to be $12.50 times $17. And now we need to ask ourselves, what does that represent? Well, we know that we had treasury stock. All right, now the next easiest part to do on this transaction, and this one's a bit tricky, is to indicate the treasury stock that we sold. And in this case, we have $12.50 times the $20 that we originally put it on the books for. The $20 is the purchase price per share. The $12.50 represents the amount of shares we have in treasury that we have now resold at $17. Okay, so now we need to figure out how do our debits equal our credits, and we know that we can't hit the income statement with any income or loss on this. Well, we had an additional $3,000 of contributed capital above on the 6th. We need to liquidate that by decreasing it. So we'll write that amount off the books. And then, according to the rules for handling treasury stock, any difference that still needs to be recorded is taken directly to retained earnings. Okay, and now to calculate this, this amount is simply forced. So we have equal that credit less, and I'm going to add this to that. You see what I'm doing here? I'm just doing some simple math. Slide this down so you can see it. Actually move it up so it stays in there. And now we have recorded the reissued, if I can spell it, treasury stock. Now let's look at September 5th. The directors declare a $2 per share cash dividend payable on October 28th to the September 25 stockholders of record. So on September 5th, we declare dividends again, and this should be similar to what we've seen before. I'm going to just copy from above. Bring that down so you can see it. I apologize for a little bit of the scrolling. I can only show so much of the window. And in this case, we're declaring dividends. What's the amount? $2 for dividends for anyone that held us on October 28th. So now we are declaring dividends on 20,000 shares outstanding. And that will equal to $2 times 20,000. And I'll just do a little formatting here. Don't bump into that. That takes care of our September 5th entry on October 28th. We pay the cash dividend. Again, I'm going to slide up to go get it and show that payment. And it's going to be just like this one, except that dollar amount is now $40,000. And now the last transaction on December 31st. We close the $194,000 credit balance from net income to the income summary account to retained earnings. And here, you've seen this before from earlier classes. If we had $194 credit balance, which means we've had net income, we would need to debit the income summary account and credit retained earnings. Our debits for this entry equal our credits, and we would label the purpose of this. Let me slide this up so you can see that a little better. And that takes care of part 1 of problem 13-2A, one of the assignments for this week.